What's up everybody, welcome to the Stocks channel. My name is Corey and today we saw a brand new closing high for the S&P 500 and a brand new all-time high for the NASDAQ 100 QQQs. So there's no doubt we're still in a very strong bull market. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Also real quick, don't forget that I am running a Black Friday special deal for Bank Trade Alerts, which is an algorithm driven trade alert service that only trades TQQQs that sends you all of your buy and sell alerts directly via email and text message. You can currently get 67% off your first month by using the coupon code Black Friday at checkout, and all of the details will be in the links in the description below. As you can see, Bank Trade Alerts is currently up 7.46% this month, and we are absolutely crushing this market. And Bank will do well whether it's a bear market or a bull market, so we don't have to worry about if the market stays bullish next year. As you can tell, in 2008, Bank still turned a profit of 72%, even though the NASDAQ 100 and the S&P 500 lost more than 30 to 40%. So if you're interested in trying out Bank Trade Alerts or finding out more details, you can click on the links in the description below. Alright, so jumping back over to SPY, we can see that we were up 0.34% today, and we did see a lot of buyers of the dip below the support level just below 467. So without a doubt, the price action and trend are still bullish, and our critical support level is now sitting just above 463, so each and every day our critical support continues to rise. So with this very strong bull trend and the bullish price action, it does look like SPY will break out to a brand new all-time high. Even though we already see SPY closing at new all-time highs, we have not yet seen a new intraday high. So we will need to see the price action break out above 471, and that should validate we're heading to our next price target at 477. Remember, every time we get to one of these price targets, we could always see a pullback. So on a breakout above 471, you will want to get a lot more cautious as we approach 477. That doesn't mean we can't go higher, but you always want to reduce your risk and start locking in some of those profits the higher we climb. Without a doubt, this is still a very strong bull market, so continue to stay bullish and continue to hold your long positions. We will see something shifting in the price action and the trend when it's time to sell, and right now we still see we're going up on low volume, which does favor the bulls to take the stairs up. We'll see high volume selling when the market's going to go through a correction, and right now we just don't see that. So watch those critical support levels to the downside at 467, 465, and 463, and if we start breaking below 463, then get a lot more cautious because we could be coming back down to the 50 EMA, which is going to be right around 454. So everything is bullish and we're staying objective, and looking at this chart, there's no reason to sound any panic alarms just because we're going higher. Remember, bull markets constantly make new all-time highs, and new all-time highs should not be viewed as bearish because they're quite the opposite. They're very bullish. Jumping over to the NASDAQ 100 QQQs, we had a very bullish breakout today, going up 1.04% and breaking out and closing at a brand new all-time high. So we blasted right through 401, so it does look like the QQQs are going to start running to that next price target at 409. Remember, usually I like to see two closes over a breakout, so watch for that confirmation that we can hold this breakout look going into tomorrow. Tomorrow is OpX, so we could just see a sideways and boring day, but overall that should validate this bullish trend, and we could continue to see this breakout continuing higher towards 409.6. So to the downside, look for potential support right around 400 to 398, and below that you're looking for 394 and our 20 simple moving average at 390, which tells you each and every day our critical support continues to climb higher. We had some increasing volume today as we saw this breakout, so this is definitely a bullish breakout that you don't want to ignore. Don't get bearish just because we're going higher, because we still do have the strong bull trend and the price action is just slicing through resistance. If we did break down below 390, we still have support right around 388, and our 50 EMA is sitting right here right around 381. So each and every day our critical supports continue to rise, which means this bull market has a ton of support below with the very strong bull trend. I can't stress it enough that you want to stay bullish in a bull market, so if you're getting nervous or you're getting cautious, just go to cash, because you're much better off being in cash and trying to short a bull market. On the Dow Jones, we were down 0.14% today, and we did close below our 20 simple moving average, but we did not lose the bull trend. We're sitting right on top of this support area right around 359, which was our previous support, but we did close below our 20 simple moving average. One day below the support level while we still have the bull trend is not time to panic, because you can see we're not going down on very high volume. We did see a lot of buyers of the dip below 359, so there's definitely buyers out there that are buying the dip, and we are still closing very close to our support level right around 360. So as soon as tomorrow or next week, we do want to see the Dow Jones bouncing higher from here and attempting to break out of that previous all-time high at 365. If we can't break back above 360 and we reject that level as resistance, then you will want to look down for that next level of support, which is right around 355, which is our 50 EMA. If we break below the 50 EMA, that's your time to get a lot more defensive and a lot more cautious, because we're more than likely going to close these gaps below in the low 340s, and then you will want to look for a potential weakness in the market. But right now we just don't see that, and we're still above 355, and we're very close to bouncing back up to new all-time highs. So on a break above 365, your next price target will be 372. On the Russell 2000, we were down about 0.42% today, closing right on top of our positive sloping 20 simple moving average and holding on to the bull trend. Now remember, the Russell 2000 had a very bullish breakout, which was a macro level bull breakout, because we were breaking out of a consolidation that's been going sideways since February of this year. That was the breakout level above 234, and as you can tell, we did backtest that level today and it did hold up as support. So we have a lot of support levels that are very critical that are holding up. So we are still seeing bullish price action because we're holding above critical support. Now, if we start to break below 234 and we fail to hold above 232 or 230, then you will want to get a lot more defensive, because the bull scenario is very likely not going to play out. So as long as IWM is above about 229 to 230, you can stay on the bull, because we still have the bull trend and we still have bullish price action. We're not seeing a ridiculous amount of selling on high volume, and we did break out on increasing volume. So there's definitely a lot of bulls in the Russell 2000 that are getting ready for that next leg higher. So to me, the most likely scenario would be a bounce off of 234 or 232 and then break out back above 238 and get to these next legs higher at 245 and 250. We'll leave it at that for now, because that's the highest probability chance, with the other probability chance being we break below 229 and then come down to close the gap at 222. I don't think that's going to happen, but leave all scenarios open, so watch that critical line in the sand at 230. On the ARKK ETF, we were down just about 2.5% today, and we did close that gap at 113, so say goodbye to that gap, and this could have been the bottom in ARKK. This is more than likely a capitulation in the growth sector, and Cathie Wood has been having an absolute terrible year, and her ETF is still in the red for the whole entire year, even though we're in one of the strongest bull markets in history. So facts are facts, and the question is the growth sector going to explode from here, or is Cathie Wood's ETF just going to turn into a turd and continue to dump? So look for this gap close at 113 to potentially be a strong support level, and this is still an inverse head and shoulders look. Remember, we just need to stay above 107 to not invalidate the inverse head and shoulders. So the line in the sand is going to be right around 107, and if we break below that, we're going much slower, and we're more than likely going to see the ARK ETF going into a bear market. So right now, the highest probability chance is that we stay above 110 and eventually bounce and break the neckline at 126, and then start heading up to that price target at 143. I'm sticking with that as long as ARKK is above 107. So as long as ARKK is above 107, I'm bullish, even though it's obviously not a very bullish looking chart. We have to think ahead, and we have to think of all the scenarios. The most likely scenario is that we're getting capitulation in the growth sector, and eventually when you hit capitulation and you hit a bottom and everybody and their mother has already sold, there's nowhere to go but higher. So that could be the scenario for ARK ETF. So continue to watch these critical support levels and look for the confirmation of that breakout above 126. On the VIX, we were up 2.81%, which is completely to be expected on a day that we're going through OPEX and there's a lot of volatility in the market. Overall, the VIX did get rejected from 18.2, so you still want to buy the dip, and we don't want to get cautious until we see the VIX closing above 20. So even if the VIX were to spike and close that gap at 21, as long as we close below 20, you want to buy the dip, because we're more than likely going to continue to go higher. If we close above 20, I was likely wrong and we're going through a deeper pullback or correction, but that's why we stay objective and that's why we continue to watch price action. As long as the VIX is below 20 and definitely below 18.2, you want to stay on the bull. On Bitcoin, we're currently down about 5% and we are below that critical level at 59,000, which means Bitcoin is very likely coming back down to about 53,000, which is our next buy the dip level. We're still going down on increasing volume, so there's definitely a lot of selling pressure behind this. But overall, if we look at the macro view of Bitcoin, which we will do this weekend, we are still in a very strong bull market. So if Bitcoin fails to hold above 53,000, then you want to get a lot more defensive, because we're more than likely going to see a capitulation in Bitcoin, but I just don't think that's going to happen. More than likely, Bitcoin will stay above 53,000 or above 56,000, and we will start breaking out to a new all-time high this year. Remember, my price target for this year is at 75,000, with the possibility of breaking that and getting to 86,500. However, I'm wrong. If we start breaking below 53,000, we could start heading back down to about 40,000 or 30,000. I don't think that'll happen, but we do want to leave that possibility open if we do see the price action breaking through support. So right now, watch those critical levels at 56,000 and 53,000, and the breakout level would be a close back above 59,000 to tell us that Bitcoin's going back on the bull. On Amazon stock, we were up over 4% today, so we finally did see that very bullish breakout, and we did expect to see this because we knew Amazon was in a full bull trend. All of these moving averages are stacked to the bull side, and we continue to see Amazon climbing with higher highs and higher lows. So that breakout level was on a close above 36.05, and we did get that today, blasting right through all of our price targets and going straight to 3,700. So the next price target is 37.60, and above that we're going to more than likely start running to 3,800. So Amazon's looking very bullish with downside support now sitting here at 36.28 and the breakout level right around 36.11. And if we do come back down, you will want to buy the dip off of 35.52 and 3,500. Our 20 simple moving average is right around 34.60, so that will be another strong support level as well. We're breaking out on increasing volume, so we could start to run. So continue to stay bullish on Amazon as long as we have this bullish trend. On Tesla stock, we were up 0.68% today, and we did close back above our 20 simple moving average for the second day in a row, and we're still holding up above the support level right around 1080. So overall, Tesla does look like it wants to go up there and close that gap at 1208, but don't get overly bullish on a bullish breakout. We're more than likely going to close that gap and then continue to consolidate and form somewhat of a bull flag before we can eat some time off the clock and then see a breakout. Remember, we're either going to break out to the downside and close the gap at 900, or we're going to break out to the upside and get to that price target at 1412. But overall, the message I'm trying to deliver is that while Tesla is more than likely going higher, in the macro level view, we're more than likely going sideways. So look for a rejection right around 1220 to 1208 to potentially head back down to the bottom of this channel right around 1080 or 1050. Overall, I'm bullish on Tesla because the price action is bullish, but overall you will want to be defensive if we start breaking back down below 1080 and 1050, and eventually if we did close below about 987, it's very likely we're coming back down to about 950 or the gap close at 911. So there's a lot to pay attention to in Tesla stock, so if you're not sure about these levels, you're much better off just staying away from it. But overall, right now it does look bullish, and it does look like we could be heading back up to the 1200s. On Apple stock, we were up 2.85% today, and we did get confirmation of that bullish follow through because yesterday we did get that bullish breakout. Remember, on a break above 152, we were full bull on Apple because we had the bullish price action in the bullish trend. Well, here we are at brand new all-time highs, blasting right through 157 like it wasn't even there, closing just above about $1 higher. So right now, the more likely scenario is that we're going to continue with this bullish impulse and go straight to my price target at 162. Remember, that's my price target, so I don't necessarily think Apple has to go any higher than that. So once we get to 162, we'll need to look at the price action and see if Apple can continue to go higher. We did break out on increasing volume, but there's always the possibility of sell the news. So wait to see what happens when we get to 162. There is the possibility we pull back a little bit and test this breakout, so look for support at 157, 154, and if we continue to go any lower, the strongest support level will be right around 152. But overall, you can't look at this bullish price action and the bullish volume and the strong bull trend and be anything other than bullish on Apple. And as I always say, Apple is a market moving stock. So if Apple is going higher, don't expect to see the rest of the stock market pulling back and going through a correction. This is bullish price action on a very critical stock, and it does look like Apple has plenty more upside. On the financial sector, we were down 0.5% today, and we did bounce off the 50 EMA intraday, and we continue to see the trend shifting towards the lower prices. But right now, as long as we can hold support at the 50 EMA, it's still possible financial sector could go for another leg higher. The industrial sector was down 0.21% today, bouncing off the 20 simple moving average and still holding on to the full bull trend. The healthcare sector was up 0.04% today, closing above the 5 EMA and still holding on to the bull trend. The energy sector was down 0.59% today, closing below the 20 simple moving average, and it does look like it's heading back down to the 50 EMA while it's losing some of the bullish trending. We could see the energy sector bouncing off the 50 EMA or breaking down and starting to go back down through a correction. So jumping back over the S&P 500, you can definitely see this is still a very strong bull market, and we still have bullish price action, and we still have the strong bull trend. So stay objective and stay bullish, and if you're getting nervous, just go to cash and wait it out. But overall, this looks like a very healthy bull market, even though there's plenty of fear mongering out there and plenty of noise. As I always say, follow the price action and trade with the direction of the trend and block out the noise. If fear mongering is scaring you out of being profitable in this strong bull market, just unsubscribe from fear mongering and stay objective. That's our goal here on the Stocks channel, and we are absolutely crushing this market. So try not to be emotional and just stay objective. And as long as you're staying objective, 9 times out of 10, you are going to be on the right side of the trade. So don't forget to take advantage of my Black Friday deal on Bank Trade Alerts, where you can get 67% off your first month. And if you haven't tried Bank Trade Alerts, now is the best time to do that. Remember, it only trades TQQs, and all of your buy and sell alerts will come directly to you via email and text message. So if you're interested in trying out Bank Trade Alerts and want to take advantage of this Black Friday deal, you can find out all of the details about how to join Bank Trade Alerts in the description below. I also have the Stocks channel Discord, where I do intraday updates and analysis and bring new trade ideas to you weekly to help you absolutely crush this market. If you're interested in joining the Discord trading community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.